Good afternoon, everyone. 3:22 here on Friday, the 7th of May. The American market's been running 50 minutes, and quite a big turnaround today. As you can see, the advances well ahead of the declines, and some green on the color yard on VectorVest for the first time in quite a while, and intraday at least. The short-term trend has rejoined the underlying trend in being up. So let's just have a look at what's going on and go straight to the S&P 500. And this is the run-up since the 8th of March. And I presented this yesterday at our Oxford group. I felt that this is the first wave, this is the third wave, and this is some form of fourth wave, and we're pushing up into a fifth wave here of this particular move. I've been convinced for a while that we've got another run into May, and that run would seem to have started. As you can see, this started yesterday with that outside day. And that outside day, very, very powerful candle pattern, stroke bar chart pattern. As you can see, the range of this day, yesterday, engulfed the previous day. That's only one day. The more it engulfs, the better, but nevertheless that's precipitated quite a nice move up this morning, and in fact I'm long of the darn thing now from the open, and I felt it was going to move up, and then I waited for the first 5 minutes data. Let's see if I can find it here for us. There's the open at 9:30, and I employed some cutting edge rocket science and bought the breakout of the first 5 minutes bar in the direction of that outside day, and that's going quite nicely. It's up 20 points or so. The money's not banked yet, but the stop loss is under that low, so there's a little bit in the bank. It's pretty liquid, so a little bit in the bank. Let's see how far it can go. So if we go back to the daily chart, and we could if we do a fib from here, a fib, the 1.618 extension is at 4277 from memory, and the 127's around 4250. So I think it can, with a reasonable win behind it, it can get to 4250. Clearly, yesterday, the last couple of days has been very difficult days. I keep preaching to the VectorVest people that all trades pretty much end up badly, and that happened to me over the last day or two. Hortons and Nucor are going great. I'm going to talk about in a moment, but I got stopped out of Lulu and Upstart, and I got, if I just bring those up, the little buggers stopped me out pretty much at the turning point, which happens frequently. There's Lulu. And I got into this based on a weekly chart, but my entry point was just here on that breakout. Initial stop loss was there. Okay, and what I always do, folks, is that in these leverage trades anyway, not on my longer term worry-free trades, but on my leverage trades, when I've made as much as I've risked, I take off half, get the stop to entry. So when it got up till about here, it actually made exactly, pretty much to the tick, well, a few ticks short of as much as I'd risked. I then brought the stop up to entry. Now sometimes I do it a little agriculturally if I see market running out of steam, but and then of course my stop was at entry just here, and then the little bugger ran that yesterday, and of course the next day it goes up. So what can you do? Just shrug your shoulders. Made a little bit on half the position, and now looking for another entry to get back in, and exactly the same thing happened on Upstart. There was Upstart. My initial entry was about here after that outside day, and I got in somewhere about here, stop loss under that low, made as much as I'd risked, brought the stop loss to my entry point, and I was stopped out either, I can't remember what it was, yesterday, the day before yesterday. It's now found a a low here. It ran this stop loss, and certainly with a little bit of confirmation I'd be tempted to get back into this again. One has to always worry about re-entering, because you could be re-entering for all the wrong reasons, i.e. I'll get you, you sod. So revenge is not a good place to be trading, but nevertheless that's just the way it goes. The trades need to be managed aggressively. And just remember the mantra: we're not avoiding risk, we're managing risk. And sometimes it gets you out. Sometimes it gets you out exactly where you should be buying in, but nevertheless the downside risk has been capped. The rest of the positions I'm really happy with. Horton couldn't be better. Nucor is going great guns, and let's have a look at AMAT. So if we chart those, and that is Hortons. That's the entry point just there. It's from a spring. I know I'm a bit of a one-trick pony, but it worked well. You see that beautiful outside day, and it's now consolidating here, folks, and that's a very bullish thing. We could see some rotation here. We could see rotation from these old world stocks back into tech again. Let's see how it goes. Some of these older world stocks, the Hortons, a lot of the builders are extended, so money could go back into tech again if the situation becomes favorable there. But this looks to me as if this is a little ascending triangle. Looks as if it can go much higher. There is the valuation in Vector S, so the darn thing is sitting well below valuation. The valuation is 157. It's trading at 101, so there's lots of room there. So that's been great. That's a Nucor. Got in late. Only got in here, should have been in there sleeping, but it's going quite well. Stops at entry, taken a little bit already. Similarly with Hortons, the stop is pulled up behind me and I've taken a little bit already. I always do that with leverage trades. In longer term trades, using our worry-free methodology, high RS stocks, I don't do that, but certainly on short term leverage trades, I try and get my stop up to entry, take a little bit, and that sort of kept me at the party, especially in the volatility of the last couple of months. Last year I'd actually probably caused the performance to be lower than it should have been, because last year the positions just roared into profit. They didn't come back in the slightest, but that's been a particularly good trade here, and stop loss is down around the 90 level, I think, somewhere underneath that low. Let's see how that goes, but going quite nicely today. It's above the Vector S valuation, but certainly going strongly. Look at the momentum in that. That came out, folks. I noticed that out of the proprietary Vector S Midas Touch watch list. That's where I in fact tripped over the share. Now this is AMAT. And AMAT, I bought it down here again. It's a spring, I know, same one trick, and I took off half when I'd made as much as I'd risked, let the other half run, and I'm still in the other half. Now it's come back and charted another textbook spring, and I bought some of it half an hour ago at 132. Yeah, half an hour ago at 132. So I've back to full position in AMAT, and this is a much better looking spring than this one, and as you can see the Vector S valuation is at 177, and the stop loss for both positions now, this one and this one, is down underneath that low. Alright, so back to full size in AMAT. That's what I've been up to. I need to start and do a little bit more. GDX is going well. We'll talk about gold now. I'm looking to add to Lulu. As I say, I got stopped out in both Lulu and Upstart. It's just the way it is. Shrug my shoulders, move on to the next. I've told you about my very first job. Our motto, one of our mottos was cheerfulness in adversity. If we now look at gold, and there is the gold chart at our Oxford group yesterday, I said I would eat all my books on technical analysis if that thing didn't move. And about 30 seconds after I said it, for once it went the right way. Normally when I say things like that, it goes the other way. But those of you that have ever called shares in public will know that frequently when you call the darn things, they run the other way on you. So this is a textbook flag, folks. And that little double bottom is 62% of this. I've spoken about that many times. It's also a confluence of this old high. That resistance became support again. This is a weekly chart. So when you see this, I think that candle people call this tweezer bottoms or something. There's a little pin bar in there, or a hammer as well, and clearly the next resistance is 1850 on this. So now the target on this is a long way up the park, to use a rugby expression, and that's the next target, David, that's the next target at 2319 in South Africa, where I spent 35 very happy years. There's a company called Sibanye, also listed in the New York Stock Exchange, and I read yesterday in a South African publication that in the last quarter, with gold and platinum at these prices, they made more than they paid for the companies. So they paid for the companies in one quarter. So mining companies around the world have been tightening the belt for a very, very long time, and with commodity prices at these levels, they are printing cash. If commodity price gold got to 2319, which it can do quite easily, I think, then many marginal gold miners are going to go through the roof. Now, they are not for the faint-hearted. I've spoken about that many times before, but my word, I've never had any crack cocaine, but I believe you get addicted to them, to that stuff, very easily. Indeed, it doesn't matter how strong you are. And similarly, once you've had a gold stock move from $1 to $25 in 2 or 3 months, you get very addicted to that. But nevertheless, they are contrary animals at times, and they have a propensity to disappoint like nothing else on the planet. But this is a particularly good pattern, but this is the upside. The upside of this pattern is this huge cup and handle, and that's why I've been sweating it out on Polymetal, because this is quite spectacular from a technical point of view. This goes back to 2011, folks, so this is a base that's been building for 10 years, and clearly it needs to get through 2079, but if it got through 1850, so if you're not in gold stocks, folks, you don't have to stress. This is not going to happen overnight, and the target here is, well, I don't want to calculate the target. It'll get you so excited you won't be able to sleep tonight. But if it breaks, and there's a good chance it'll break and go back and put the fear of God into you, but nevertheless the potential here is huge. The risk needs to be managed aggressively, folks. Alright, so that looking very good. As you know, I'm not going to put up a copper chart, but the copper chart has moved up enormously. When I started to speak about copper a year ago, there was nobody speaking about it. Now it's everywhere. Okay, so you just have to worry. I think that the future for copper and commodities is outstanding, but we could be towards the end of the first wave and we need a second wave back. So hello, my BlackRock World Mining Investment Trust that I've been putting money into for the last year odd, That's done exceptionally well. One has to be very careful with that. I'm going to talk about that at the VictorVest Q&A on Monday afternoon. So this is a very exciting development. That break on the gold market above that high was a very important fib level of this, so a lot of people in fact got stopped out at the 1800 level. Let's see if it can break 1850. Even the most conservative folk out there, if you see a weekly close above 1850 odd, or a couple of weekly closes up there, then probably even the most conservative people should think of a couple of gold stocks. All right. So that's gold. In the UK, I think I've got some work to do because I've let this portfolio maybe stagnate a little bit, but it's well up. Many of the shares are up 70-80% on the year, so I mustn't knock myself too much, but I've been a bit lazy. I've been thinking of Cranswick, and it's done absolutely nothing for me. I love the company, I love the sausages, but it's done absolutely nothing for me. So if we resort this by RT, as you can see, 4D Pharma is doing the same to me as it did to Neil Woodford. It's sitting on a 78% fib level at today. I'm not going to chart it because it upsets me, but I think that that probably has to go. It's a tiny position for me, but Bellway looking very strong. I bought Bellway under £30 and it's looking very strong. SLP I bought at 47 pence and I've added to it a couple of times along the way. Lion Trust is well up, CCC is well up, although I took a bit of profit along the way in CCC. Games Workshop, quite excited about Games Workshop at this levels, folk, because as you can see, it found a lot of support here, and clearly when you see a pattern like this, you have to say to yourself, is this a topping pattern? And clearly many people would say that that's in fact a double top, and it's going to go right down to here. Well, that didn't happen. That was a support level. I added to the position there, and I actually bought a few more here, so I'm betting that this thing can keep on going. Earnings per share, as you can see, has flattened out a little bit, and there is the worry that when we all go back to work we won't be playing as many games. Whether that's true or whether that's in fact something that somebody writing in the newspaper made up because the market was going down. So if we look at this over 3 months now, we can see a good technical picture here for more upside, because that resistance, as you know, became support. There's the old one trick pony again, and came back once up, couldn't make a new high, came back and reversed, and if it can get up a little bit here, we can actually go a long way here. Certainly up to that old high. If we get up to that old high, then we're well away for another push. Needs to be watched. Needs to be watched. There's not a lot of volume that I could see. At least make any sense. Some volume's very difficult to make any sense of at times. Sometimes it really hits you, but that's not bad. This is not bad. That was a very good day, somewhere up around here. It's not hitting me between the eyes volume. But I'm holding it, and it's quite a big position for me. When shares go really, really well and you add to them, you find that you've got one share that's got far, far too much as a percentage of your portfolio, and people give you grief for that. But it's a grand wee problem to have, because it means the share is going your way. If we look at go back to gold, okay, as I say, it's so easy to get addicted to this stuff, but that's polymetal, and it's doing pretty much what the gold price is doing. Surprise, surprise. And it came back to that 62% retracement. It also needs to get above this trend line top, and then people will pile into it. As you know, I sweated out. I ignored those sell signals as it stayed above that 78%, 62% retracement. The target on this is certainly somewhere up around £25, folks. And remember, it's paying a cracking dividend as well. So you would have to have your money in Lloyd's for about 20 years before what this will pay you in 1 year. And that's why I've been saying to anybody who listen to me that I believe over the next 2 or 3 years that the commodity market will be the bond market if you're looking for income. Very safe growing commodity stocks that probably pay 5 or 6% dividend yield, like that BlackRock World Mining, which has got all the usual suspects in there. Rio, Glencore. Glencore's the world's biggest copper producer, folks. So I need to Italia Mining, not going as well as I'd like, and I couldn't resist buying a few Pan-African Resources at 18. Managed to get them at 18. Okay, 18p. So I bought a few of those. Really like the pattern, and I really like the share fundamentally. As you can see, VectorVest believes it's worth 34. It's trading at 18, but I really like this pattern, and I've spoken about this pattern a few times. One leg up, down, up. Now it is a spring, there's no doubt about that, but it's a subset of the spring made famous by a gentleman by the name of Gartley, Harold McKinley Gartley, and that's one of his patterns. My friend Larry Pesavetis named it a Gartley 222. And as you can see, a little head and shoulders reversal here just to confirm, and it broke up through that, and I felt that that was a good place. So it's a small position, stop loss is tight. This is the gold market. If you want to be really conservative, wait for a couple of weekly closes above that 1850 level. Then I think that even the most conservative people should be thinking of getting into some gold stocks. I've got a bit of work to do in this UK portfolio. I've rested on my laurels a little bit, but nevertheless the portfolio was up in the last year 55 to 57%, so I'm reasonably happy with that, with virtually hardly any trading at all. So I've gone on far too long probably. Let's go back to the homepage. Nothing much has changed here since the last time we looked. The Nasdaq up for a change, and the Dow up 142 points. As you know, the difference between the Nasdaq and the Dow has been quite dramatic over the last day or two. That S&P chart, if I can find it, still going strong, and hopefully my little position still well in the money there. So folks, if you want to come along, if you're not a VectorVest member, you want to come along to my Q&A session, well, it's on Monday afternoon, 1:30. If you haven't got an invite, then david.paul@vectorvest.com. Just remember, don't avoid risk, manage it. On leverage positions, think when you've made as much as you've risked, think about getting your stop to entry, taking a little bit of profit, and then do your best to keep your hands off the rest of it. In longer term trading, well, you want to be right with a big position. So I think that it's always best to try and keep that position running with looser stop losses. Remember, it's not a leverage position. If you've got leverage, everything changes, and if you don't believe that, just try it. So when it goes your way with 5-to-1 leverage, the world is very rosy, and when it goes against you, not quite so rosy. You can feel quite miserable. So this, I think, has got legs in it. We shall see. It only needs Janet Yellen to stand up and say we're putting up interest rates, or we might put up interest rates, and the whole thing will go to hell in a handbasket. So you saw what happened during the week. I think that there's a strong move up in stock markets to come. Until we get into the middle of the end of May, and then I think we'll move into the summer doldrums. And I'll be trying to answer on Monday afternoon how we should in fact trade those summer doldrums as they come around. So folks, I hope you found this helpful. The video I did a few days ago, I don't think the sound was all that clever in it, so I've got a new set of headphones, so I hope the sound's better on this one. Have a great weekend, and VictorVest subscribers, I'll see you at the international user group tomorrow afternoon. I'll be speaking at 4 o'clock, and then anybody that wants to come along, it'll be a pleasure to give you a free invite for Monday afternoon, 1:30. I'll show you all the trades that I'm taking, warts and all, the good ones and the bad ones. I assure you that there are plenty of bad ones. The key is to try and manage the risk on those so you lose as little as possible. And then to take deep breaths, and when the damn things go in your way, to try and stay well away from it and let them run. If you don't let them run, the good ones, like in a move like this, if you don't let that run, it's very difficult to get ahead. Bye-bye.